Good morning, everybody. This is the live market open for June 8th. It's a Wednesday. It's the middle of the week. I'm Yohay Elam, Forex Crunch and Market Movers podcast, doing the show for FX Street as usual. As always, we'll cover recent developments in markets, the various charts and levels, talk about the next 24 hours, and answer your questions. If for any reason you can't see the chat box alongside the screen, the video, please go to the address here, tlk.io/fxrate-forex-live-video. And today we'll also have a special segment about the Kiwi. Okay, but first of all, the mood in markets, the news. Good morning, everybody. Morning, Hans. Morning, everybody else. Well, oil settles above $50. I mean, we talked about this earlier this week about how oil prices were sort of flirting with this number. First attempt failed, and now they're settling above $50. And that of course positively impacts the Canadian dollar. But not only that, in general, there's a slightly better mood in markets, a slightly better mood which does not match what the World Bank said. They cut the growth outlook for the whole world. In political news, we have Clinton clinching victory in the Democratic Party. Sanders still refuses to quit. There's one more primary in Washington, D.C., but it seems quite evident that she has the wide majority. But it's no surprise it's going to be Clinton vs. Trump. And regarding the Brexit, no new polls, but we had a fierce debate last night between the Prime Minister, David Cameron, and Nigel Farage of UKIP. Each side claims a victory, of course. Anyway, we have 2 weeks and 1 day to go, and it seems very, very tight. Good morning, Fabian. Good morning, Ed. Yeah. In terms of data, not too much going on. The Eurozone GDP was revised to the upside, so growth is much better here. We're moving up to 0.6 instead of 0.5 in Q1. Another thing about the Eurozone is that, well, today is the day that the ECB begins its corporate bond buying program. Okay, so today it begins buying investment-grade bonds of corporations. We've already seen corporate costs falling. Bonds. I mean, lending has risen to a record, and I mean, companies are borrowing more money in markets and for cheaper prices. All this ahead of the ECB's move. I don't think we'll have a big move today. I mean, just the beginning, but eventually it'll be an interesting process to watch to see if it really helps the economy or if it drives money out of the Eurozone. As today's the day it begins. U.S. labor costs figure released yesterday. It's the revised figure. They went up to 4.5%. It's supposed to be positive for inflation, but I don't know. We're not seeing inflation. The Fed is not really up for cutting. Raising rates anytime soon. I mean, the markets really are not really fond of the US dollar at the moment. Yellen's speech is seen once again as dovish, well, not surprisingly so. Elsewhere, Canadian IVPMI missed to 48.2. It didn't stop the strength of the Canadian dollar on oil. Japanese GDP was left unchanged at 0.5. Remember, we have elections for the upper house in Japan in early July. And Chinese trade data looks better. That was perhaps the most important economic release in the past day or so. Imports are okay. In US terms, they fell just a bit, 0.4 instead of something like 5% expected. And in yuan terms, they even went up. So if imports are looking better, it's in theory good for the Australian dollar and good in general for the global economy. Investment grade, you comment, Ed, get slaughtered grade. Some big corporations in Europe are not really doing that well to justify the ECB's buying, but that's a whole different story. Let's look at the charts. Euro dollar remains very, very, very stable. I must say I don't like it at all. We finally had a break on Friday. Here we are above 113.35, further resistance 114.10, and 114.60, support at 112.50. Pound dollar, this is yesterday's big fat finger move, move above to 146.50, just to fall back down. We are at higher levels with the pound. We are seeing some recovery. I didn't see any new Brexit polls, but maybe, well, no bad news, so maybe no news is good news for the pound at the moment. Looking at the Brexit trackers, and I'm seeing nothing. Currently, we're sliding just a bit, 145.30, the range 145 to 145.80. Dollar yen sliding back down. We had an attempt to move higher. Now we're back down. 105.50 is the very, very strong support. We're currently hugging the 107 level. I would say, yeah, it's a bit messy down there. Still stick to 107.65 as resistance, followed by 108.25. Yeah, the GDP figures, well, they pushed dollar yen a bit lower, but not. It didn't last too long. We're seeing a bounce back to previous levels. Dollar CAD, here the move is more significant. Of course, good news from oil prices. The price of WTI crude oil is above $50, and this time it lasts a bit longer. So we fell under critical support here at 127.50. I wouldn't say the breakout is confirmed just yet. Look how strong this line is, working here as support, here as resistance, once again as resistance. Yeah, so the next line in any case is 126.30, and then 125 to the upside if we break back above 127.50, and we're really close to that level. Then 128.30 and 129.10, the previous double bottom, is resistance. Okay, Aussie dollar. I had expected an extension of the rally and the Australian dollar because the Chinese import data was okay, but no, we're stuck. Well, we're on higher ground. We're clearly seeing a bounce here, but the road, I mean, it seems that the Australian dollar lost some momentum on the way to 75, and it's sliding just a bit. It holds its high ground, but it's not advancing, okay? Support 73.75, resistance 75. Okay. And the Kiwi dollar, here we're seeing more gains, 69.80, getting closer to that 70 level. Settling, the Kiwi made a break above resistance at 69.50. The next level of resistance, well, the natural one is 70. We touched that level, but look at this very nice double top here on Kiwi dollar at 70.50. That's the next line of resistance. Support 68.80. We'll talk about the Kiwi more in general in a special segment later on. Comment here by Ed. I'm looking to close out my long-term holding trades that I hold with European brokers, and will look for new brokers in Hong Kong, Singapore. My view of trading FX assets in Europe are going to be sleepless nights, having made profits to be lost with out-of-business brokers like my Alpari went bust with, but fortunate I was in zero balance. Yeah, well, last year we had the SN bomb. Luke asks about Alpari went bust. Well, there are a few different Alparis. So Alpari UK did go bust last year. The SN bomb killed it, okay, exploded the company. That removal of the peg under Euro Swiss on January 15th, 2015, well, it hurt quite a few Forex brokers, and the strongest one to be hit, of course, well, there were a few ones that went bust. One of them is Alpari. So, boom, this move here is what killed Alpari UK. Again, there's another Alpari which is alive and kicking, Alpari Russia. So it's only Alpari UK. So far, it's been a frustrating process for traders to retrieve the money. KPMG have been nominated as sort of a trust to liquidate the company, and they've taken very nice fees for themselves. Yeah. Yeah, supposed to be protected, right? Alpari UK. I see why they gave 1 to 1,000 leverage. Well, it's Alpari UK. I don't think they had such a high leverage, but they clearly mismanaged their business and they went bust. Okay, let's continue with dollar Swiss above support here at 96.40. Okay, holding on to this level. We're seeing also in dollar Swiss some weakness of the US dollar, especially yesterday. Now we're a bit more stable. Further support 95, resistance, well, strong resistance at 98. So this fall of the US dollar from the down from payrolls is also reflected in dollar Swiss. Euro Swiss, well, it also fell a bit. Okay, maybe the S&B now is a bit asleep, not supporting not weakening the Swiss franc. So we fell under 110 for the Swiss franc. This is quite a big move for Euro Swiss. I mean, so we fell to support at 109.50, and I would say now it's a range between 109.50 and 110. The moves tend to be very, very shallow until we have some bigger move. Yeah, Euro pound. Well, here we had the fat finger effect. This big slide here towards 77.40. We bounced immediately back up. 78.30 remains very nice resistance here. Euro pound is one of also the better currencies. 79.30 is further support. Further resistance. Support at 76.50 and 75.60. Okay. Euro yen, well, a bit more choppy. We fell last week to new lows at 120.80. Since then, we've bounced back up. 123 is resistance. This is for institutions. This is an important cross between the euro and the yen, of course. But for forex traders, I know it isn't that popular. This is a much more popular one. Pound yen. Also here we have the fat finger effect that sent pound yen to resistance at 158. Since then we've slipped back down. 154 remains support. 158 high resistance. Currently we have much more shallow movements, but this could erupt quite soon. Question here: did anyone follow the UK TV debates yesterday? Cameron got smashed again. Well, I didn't follow the debate itself, but I saw some highlights, and I don't know. I know that every side claimed victory. Do you think that Cameron lost the debate, that Farage was doing better than him? I mean, Nigel Farage is more charismatic, that's for sure, and Cameron, well, anyway, it's a right-wing vs. right-wing debate. I would be also interested to have on the Remain campaign to hear more from Labour, not only from David Cameron, and also on the Leave campaign. It's not only UKIP, it's also parts of the Conservative Party. So I would prefer to see Nigel Farage against a Labour member and two Tory members against each other. But anyway, I only know that it was also the last day to register for voting, and following this debate, eventually, apparently many people saw this debate and decided to register to vote in the last moment, and the website of the government crashed. So at least we know it was a heated debate, and that it's going to be very interesting in the referendum in 2 weeks and 1 day, 15 days to go. Okay, last but not least on our charts, WTI crude oil finally making the break and settling above $50. The range for this morning is very narrow, 50.30 to 50.54. We can still slip under 50. Remember that real resistance is not at the round number. I mean, the high seen back in October is 51. Okay, and it also was support beforehand, and we haven't really tackled this level. So I would expect to see a more significant attempt to break 51. All right. Comments here. The UK by Ed. UK should get Parkinson interviewer to ruffle Trump feathers and Clinton. Yeah, but I think he may have died. Yeah. There's some really great interviewers and tough talk in the United Kingdom. It could be useful also in the US. Right. Anyway, crude oil is above $50, and today we have a big test for crude oil as well. With the crude oil inventories.
10 seconds before the release.
Whoops, sorry for that noise. Didn't I mute it? Okay. Anyway, yeah, let's go back to the hourly chart here. And let's talk also about events for today. So today we have, I would say every day we have events which are more important than the previous day. At 8:30 GMT, we have industrial output in the UK. It's industrial output and manufacturing. Usually has some impact. Today, I believe it'll be a bit limited. I mean, usually, as I mentioned a few times, we have these movements ahead of the release, front-running the event. There is significant slide in pound dollar or a significant rise, then a reaction, then everything goes back to normal. It's about an hour, the whole affair, 30 minutes before, 30 minutes later. This time, I believe it'll be even more limited, especially as things can get confusing. Let's look at the calendar here, the FX rate calendar on Forex Crunch. Let's look at today's events. Where are we? Here we are. So we have both manufacturing, which is 80% of industrial output in general. So we have both figures released, and we have the month over month and the year over year. Anyway, for the year over year, we're expecting drops, 1.5 in manufacturing and 0.4 in industrial output, and month over month, no changes are expected. Because of the proximity to the euro referendum, I believe the impact will be very, very limited. Okay, especially and this is of course even truer if we have figures, I mean, offsetting each other, one in manufacturing rising and industrial output falling, or the other way around, or if we have a good year over year and bad month over month. Yeah, if we have if we have a terrible outcome in all the figures or a great one, then we might have more significant impact. But markets are sort of holding their breath for the next EU referendum opinion poll. Okay, let's continue. Other events for today. Canadian building permits, also not a top tier one, but if you are trading the Canadian dollar, if you're looking for confirmation or to disprove this break, this might be a significant one. No big changes are expected. 190,000 houses built year over year. This is an annualized figure. So if we have we have housing starts and building permits 15 minutes apart. It could be confusing. So building permits are expected to bounce by 1.5 after a big fall, and housing starts to remain basically unchanged. Things could be interesting right here. Yeah, I mean, for the Canadian dollar, it's sort of a warm-up for crude oil inventories later on. At 4 here in the old continent, 2 GMT, we have the JOLTS job openings. Yellen referred to this in her speech. This is one of the Fed's favorite job figures because it reflects intentions of employers hiring. And also what's important to look here is not only the level of openings, but also the level of quits, okay? When people quit their jobs, it means they have more confidence and usually opt for a higher paying job. This should be a positive figure for the economy. So last time it was really a great report, 5.75, and this time 5.67, a small drop is expected. One thing that makes it a bit less important is that it's lagging. We now get the report for April, whereas the NFP is already for May. Nevertheless, we also had a weak jobs report in April, and it'll be interesting to see if the JOLTS figure confirms this weakness or not. Not a top tier figure, but I would say second tier. And if we have a big surprise to the upside or to the downside, I do believe we'll have an impact on markets, a small change perhaps, but still a change in rate hike expectations in the US. Let's look at the rate hike expectations. I think they have fallen just a bit more. So for June next week, only 4%. For July, it didn't change that much. I think yesterday it stood on, it stood on 72% against the rate hike. Now it's 73. so a bit lower. Let's see if it moves after this one. Okay, see a few comments here. Lucas says, I'd like to see a real Brexit debate between Austin Powers and Mr. Bean. Yeah, me too. Sign me up for that as well. Luca, what about that Sasha guy? You mean Sacha Baron Cohen, the actor that does Borat and Bruno? That could be interesting as well. Yeah, UK comedians are the best in the world, or at least on the top of the top. So that would be funny as well. If you guys have any satirical content regarding the Brexit, I'd love to see that as well. Talking about the UK, we also have the GDP estimate by Neezer. It's an independent firm. Let's see if we have another deterioration in GDP expectations. Remember, it's not the official figure, but nevertheless important because of the expectations for Brexit. This is a very fresh figure for May. And at 2:30 GMT, we have the crude oil stocks change, or crude oil inventories. A drawdown of 3.5 million is expected, and it should support oil prices, get it to tackle the 51 level, the peak seen in October. But you never know. Also, alongside crude, we also get distillates, we also get gasoline, and we also get production for the United States. Okay, production continued falling in recent weeks, and let's see if it falls once again. And if it falls, of course, it's good for oil, but if it turns back because of higher prices, things can change. See another comment here. Yeah, bring him on too. Sacha Baron Cohen would keep the queen on her heels. Yeah. God save the queen. Yeah, she's in good health. I saw a few quotes of the queen, I mean, from 2008, but I saw it rewritten, quoted once again. She asked economists, how come you didn't see it? Which is a really great question. Her Majesty knows what she's talking about. Anyway, it says go Hyde Park Corner, UK on a Sunday, and it's free speech and it's hilarious. Yeah, I've been there once many years ago. It's really funny, people standing on something, some kind of box to make them a bit taller, and they speak out. Speaker's Corner in Hyde Park, central London. Okay, let's continue. For those of you trading commodity currencies, and this sort of leads us to the special segment of the day about the Kiwi. So today we have a rate decision in New Zealand. That's at 9 GMT. We also have it's followed by a statement. So there's no clear consensus on what's going to come out today out of New Zealand. So some expect the RBNZ, the Reserve Bank of New Zealand, to cut interest rates. One good reason to cut interest rates is to weaken the Kiwi dollar, and that would help exports. It would help exports and reflect sort of some kind of weakening or weakening of forecasts in GDP and employment, things like that. On the other hand, the milk prices are rising. The economy is still okay, at least for now. Prices in Auckland, in New Zealand's biggest city, are rising. You wouldn't want to encourage a bubble over there. So it's an open question. That's why I see it. I think nothing is fully priced in. Some expect a cut, some don't. The current interest rate in New Zealand is 2.25, and it could be cut to 2%. Could be left unchanged. Apart from the rate decision, we'll also get expectations for the next move. And if we have a rate cut, for example, but a message that we're on hold for now, then the Kiwi could actually rise. But if we have a more probable scenario, which I've seen written by quite a few analysts, that the RBNZ will not cut now, it'll wait for Brexit, the Fed decision, you name it, but we'll open the door for rate cut in August when it meets for the next time. It's going to be the middle of the winter in New Zealand. Then the Kiwi will, of course, fall. Okay, so that'll be sort of, it's an open decision. Currently, we're seeing the Kiwi strengthening ahead of the decision, but and anything can happen afterwards. It's totally open, totally binary, not one scenario priced in and another would be a shock, okay? Anything can happen. So that's another event we have today is Chinese CPI inflation figures in the Middle Kingdom, if they're still called that way. So yeah, let's look at it's already on tomorrow's agenda. Yeah. Don't understand how come it's a holiday in China, the Dragon Boat Festival, but they're releasing inflation figures at the same time. So there's a big difference here between CPI, Consumer Price Index, which is quite healthy, 2.3%, and Producer Price Index, which is still negative, minus 3.3. It isn't as important as trade or GDP or industrial output, but should also be interesting for the Australian dollar. And well, tomorrow before the show, we have unemployment rate in Switzerland, and it's expected to remain 3.5. Shouldn't have an impact either. And also imports. Some figures from Germany. We'll talk about that tomorrow morning. See more comments here. Anyone using FXCM? Anyone heard about margin changes? I did hear that they're preparing to announce something, okay? FXCM, this is an opportunity to thank Ed for yesterday's emails. He sent me some updates on a few brokers, on CMC, on FX Pro, and Wanda. And I have an article up in Forex Crunch with updates already from 7 brokers regarding their margin changes. One of them is FXCM. They only talked about making changes, but they haven't, as far as I know, they haven't announced anything. Again, this is an opportunity to call on everybody. If you have some information about brokers, let me share this article with you, some self-promotion. Then please let me know. Okay. The article was published actually over the weekend. Yeah. And I just updated with every figure I get. Okay, every piece of news I get, it's not figure. Okay. So that's regarding this topic. Just a moment. Yeah. Okay, sorry, was distracted. Anyway, let's continue and do the special segment for today. Today's special segment is about the Kiwi dollar. Here are 5 characteristics for the Kiwi. Some of them are in common with the Aussie, some aren't. So first of all, for most obvious thing, like the Aussie, like the CAD, a few other currencies, Kiwi dollar is a risk currency. Okay, that means that when things are good, the Kiwi dollar with its higher interest rate, non-zero interest rate, even if they cut it today, is attracts sort of risk taking. And when times of trouble, it falls. Okay, it's not always a one-way street, but that's the main theme. Okay, so when stock markets are on the rise, especially in Asia, the Kiwi rises as well, and the other way around. Another characteristic of the Kiwi in terms of fundamentals is that many figures are released only on a quarterly basis. So like Australia, CPI and PPI, inflation figures are released only once per quarter, okay? But also employment. Only once per quarter, the officials in New Zealand release their employment report, okay? The same goes for retail sales, which is released everywhere else on a monthly basis. So in order to compensate for retail sales, many look also at a figure called credit card expenditure or something like that, and credit card spending, because as a developed country, Kiwis use use credit cards for many transactions, and that's why they how they sort of can assess the level of retail sales by looking at credit cards once a month instead of waiting for the retail sales report. Okay, and like in Australia, GDP, of course, like in most countries except Canada, it's released once a month. Once a quarter. But this is always one and final release. Okay. Third characteristic of the Kiwi is that it can get carried away after the Australian dollar. Okay. So if we have some good news for Australia, we can see the Kiwi also climbing along the Aussie dollar. So in some cases, they're trading in tandem. And if we have, for instance, a rate cut from Australia, many expect a rate cut from New Zealand, and the Kiwi can fall. Okay, so sometimes it gets sort of carried away after the Aussie, and also because in Australia you have more higher frequency of data. Okay, but to contradict that just a bit, and not the fourth point here is that it doesn't always follow the commodity camp. Okay, so if we look at Kiwi dollar as a commodity currency, it's a bit different than others because the main exports from New Zealand are agricultural, milk, dairy products. There's much more clear demand for food in comparison to oil prices in Canada, or iron and copper and other metals which are used for industry and housing, and this comes out of Australia. So in times of trouble, when other commodities are falling, you can see that the demand for milk, for other dairy products, for wool, agricultural products in general is much more stable. Okay, so yeah. And the fifth point, this is similar to the Australian dollar, and of course it can be controversial. I see it as, it usually appears on my list of the top five top five most predictable currency pairs. Okay, it doesn't always top the list, it usually doesn't top it, but it's usually sort of leans to the more positive camp in terms of predictable technical behavior. For instance, this 70-50 double top is very, very nice. Okay, so that's a special segment for the Kiwi. I see questions here about this. Well, Fabian asks, how much is the Kiwi dependent on Chinese data? Well, the easy answer is much less than the Aussie. Okay, but New Zealand sells dairy products also to China. But even if, let's say, we have less factories built in China or less dwellings, residential property erected over there in the world's second largest economy, people still drink a lot of milk, eat a lot of cheese, and buy the high quality New Zealand wool. Okay, so that's my fourth point, that it doesn't always get that carried away on Chinese data. It's sort of more peripheral. The Australian dollar is much more sensitive. Okay, but again, if we have, so I would say that New Zealand is more affected by Australian figures just because markets are sort of getting carried away. Yeah, China buys a lot of powder milk and water, indeed. And I think that China also buys the actual cows, not only from New Zealand, but also from Australia and Uruguay. Okay, eventually they won't be dependent on anybody, but at the moment, New Zealand exports a lot of dairy products, milk powder for babies, cheese, you name it. Okay, so yeah. Another question from Fabian: if the Australian dollar is sensitive to Chinese data and New Zealand is carried away with, isn't the NZD sensitive to Chinese data? Well, sort of as a secondary effect, I would say. So I would say that if the data comes out of Australia, it has a bigger impact on New Zealand. If it comes out of China, has an impact on the Aussie, the effect on the Kiwi is a bit more marginal. That's my impression, at least. So, of course, it is affected. It is part of the commodity camp. It is part of the it's a risk currency, but not at the same magnitude. The reaction to Chinese data, at least, is not at the same magnitude. Kiwi weather is like UK wet. No, I think it's a bit better. Well, I've been there many years ago. And yeah, it does get wet. It's an island, but not as terrible, I think, as the UK. Also, comment by Fabian. Also regarding Australian commodities sales to China. Yeah. Again, if China is slowing down, it buys less milk as well. Okay, because people have less money in their pockets. But remember that China is trying to move away from industry and investment to services and consumption. So if it works out for China, it means that they buy less iron and copper from Australia and more milk from New Zealand. Okay, I'm simplifying things, of course, but and of course, if China is slowing down, it's in general not that good for New Zealand, but less than Australia. Okay. Comment here from Ed earlier. If any brokers go bust because they don't manage expectations of Brexit market conditions, it's a good test again to see what brokers do now. Yeah, I certainly agree with. I think that some are still licking the wounds, such as FXCM. And because of this, they're all taking precautions, right? Limiting leverage and other measures as well. Another comment here from Luca. With the European currencies affected by Brexit risks, we might see a perverse moment of antipodians being used as a safe haven. Let's say along the yen, since they would be largely unaffected by Brexit. Maybe, but well, we haven't seen that yet. I mean, Brexit is bad for the UK. I mean, again, as markets see it, at least in the short term, there's an agreement that economically it's bad for the UK. And as I see it, not only I, Brexit is also bad for Europe. Okay, it's the beginning of the end of the European Union, if you wish. It's also bad for the global economy because it's lots of uncertainty. The Fed puts emphasis on this. I would say that in case we have a Brexit, first of all, it would be the best for the Japanese yen. I think we can agree on that. The ultimate safe haven currency. I would also say that it could be good for the US dollar. Now, in theory, it would push back the rate hike in the US once again. But the US dollar is also some kind of safe haven currency. And if the euro is not a safe haven currency, the dollar strengthens in this position. I would find it hard to see. Well, in theory, anything can happen, but so far we haven't seen the Australian and New Zealand or Canadian dollars serve as safe haven currencies in times of trouble in Europe. So there's always a first. I wouldn't rule that out, what you suggest, but yeah, it would be a first. My bet is first and foremost the yen, secondly the US dollar. Okay. Thanks for the questions. Let's see if we haven't missed anything before we get to the wrap up. No, we talked about, yeah. Let's just do a small recap of events this week. We had Janet Yellen speaking on Monday. She wasn't too devastated by the terrible NFP, but in general, she's in no rush to raise rates. Okay, this weighs on the US dollar. We're seeing the effect also today. Australia, they decided not to cut interest rates and also talked positively about house prices. Okay, that helped the Australian dollar, which was already gaining ground thanks to the weak US dollar. Today, oil inventories, the RBNZ decision. We talked about that. Tomorrow, first thing, during the show, we have a speech by Mario Draghi. Hopefully he rocks the boat. It'll be one day after the implementation of corporate bond buys. This begins today. And on Friday, the Canadian jobs report and US consumer sentiment. I'll also mention, before we get to the wrap, tomorrow we'll do a preview for next week's events on Thursday instead of Friday, because there will be no show on Friday. In addition, next week I'll be off. I will join the coverage of the Federal Reserve decision on June 15th on Wednesday. I'll be traveling. I'll be in the United States, and then we'll see what's next. We're going to be doing some shows around the Brexit, and then we'll see what's next. Okay. Anyway, let's do the wrap up for today. This is the wrap up for the live market open for June 8th. It's Wednesday, so the US dollar is slightly weaker, and a better mood in markets supports oil prices. Now they're above $50 a barrel on WTI Crude Oil. They face a big test today with crude oil inventories and the level of production in the US. Okay, but the good mood is contradicted by another outlook, a growth outlook cut, this time by the World Bank joining the IMF, the OECD, central banks. So let's see if the mood remains positive or not. In politics, Clinton clinches victory. She claims victory. Sanders refuses to back down, but he'll probably do that next week. Brexit, there was a fierce debate yesterday on ITV, on British television. I think, well, I don't know who won. Every side claims victory. In any case, the one thing I know for sure, it generated a lot of interest. People registered to vote in the very last moment, and the website of the British, the election committee in the UK crashed. So that's what's going on. I'm not aware of any new polls. Figures yesterday, the most important ones, well, Japanese GDP remained unchanged, so no surprises over there. It could have been more significant. And China's trade balance looks better. Imports are okay. We're not seeing a good, significant effect on the Australian dollar, but this is certainly positive. This is certainly positive news, especially after we had poor trade data from China earlier in the year. All right. And before we move, let's look at the charts. Euro dollar, one of the more stable currency pairs out there. We're currently at 113.71, resistance 114.10, 114.60, support 113.35 and 112.50. Pound dollar 145.43 at the moment, in the range between 145 and 145.80. Still trying to understand this fat finger move all the way to resistance at 146.50. And further support 143.70. Dollar yen, well, moving a bit lower, rejected, well, 107.65. I still see it as resistance, followed by 108.25. Support at 105 is very strong support. Dollar CAD, it broke below the very strong support line, or used to be strong, of 127.50 with this rise in oil prices. Further support 126.30, 125. Resistance 128.30. Aussie dollar holding its high ground, but not moving too far to the upside. 74.47. 75 is the next level of resistance. 73.75 is support. And the Kiwi dollar ahead of the rate decision, just under 70 cents. 70.50 is strong resistance. It's a double top. 68.80 and 69.50 are levels of support. Events for today, the calendar is getting busier. In about 45 minutes, we have the UK industrial output, manufacturing output, expected to be flat month over month. Should not have much of an impact because markets are obsessed with politics, with the Brexit referendum. At 12:30, Canadian building permits, and 15 minutes earlier, the housing starts. Could have an impact. I should say housing, imitating a Canadian accent. Anyway, at 2 GMT, we have the US jobs report from the United. Well, yeah, it's a Fed favorite. It's for the month of April, though. It's a bit old. Let's see if it deteriorates. Also in April, we had a bad jobs report. May was even worse. 2 GMT, oil inventories, crude, distillates, gasoline, and the level of production. It should perhaps, if we have another big drawdown in oil inventories, perhaps we'll have WTI Crude Oil breaking above 51, which is critical resistance. If not, we could perhaps fall under 50. At 9 GMT, rate decision in New Zealand, followed by statements and the press conference by Graham Wheeler. The jury's out. Some expect a rate cut from 2.25 to 2%. Some expect no change, but a preparation for a cut in August. Should be a very interesting moment for the Kiwi. And during the night at 1:30, we have Chinese CPI. Okay, so that's the wrap up for today. Things are getting busier. Let's see if the relatively positive mood prevails for commodity currencies, which remain in focus. Okay, let's see if we have more questions before we go. It says just one data set doesn't constitute a trend. You need 3 to 6 to say a trend has started to. So 38 is just a blip, not to be concerned by Fed. Yeah, I also think that we could still have a bounce in the next report. In the report for June, we get in early July, and we have other figures as well. So I still think that July is an option for the Fed, especially if we don't have a Brexit and we have a bounce in the report. Remember that these NFP reports always suffer significant revisions. So last time it was terrible. I mean, only 38,000 jobs gained and the loss of 59,000 jobs for previous month, I mean, downwards revisions. So yeah, things are not looking good, but things can change also very, very quickly. Anyway, the Fed will not act until we have the all clear from the UK, at least. Yeah. Yeah, but for now, July, the chances for July are only 27% or so. Okay, so I guess that's it for today. Wish everybody a safe and successful day in markets. As always, the clips, the videos for the full show, the wrap up, and today's special segment about the characteristics of the Kiwi dollar are going to be published. And tomorrow, again, it's the last show for the week, and we'll have the preview for next week, which of course includes the Fed. And also tomorrow during the show, we'll have Draghi's speech. I cross my fingers and hope for something interesting. Oh, another thing before we go, I see a comment by Luca, dollar index. Are we trading in a downwards channel? Let's share your chart with everybody. It certainly looks so according to your chart, and we've bounced off the highs. Yeah. Well, the downtrend resistance is not that sort of perfect, but looks like a downwards channel. And now we slid towards the middle of the channel. Had quite a fall on Friday with this NFP, right? Okay, so thank you, Luca. Thank you, Fabian, Ed, everybody. And that's it for today. Wish everybody a safe and successful day in markets. And see you tomorrow. Thank you and bye-bye.